In this video, I'm going to compare Deere and Raytheon technologies to answer which one of these two is a better defensive dividend stock to buy. The risks of a recession are rising, especially here in the US. And so if there's a recession coming, it's usually better to allocate more of your portfolio to defensive dividend stocks, which experience a lesser decline in price in the event of a recession, because the defensive typically means these are items that people, governments, institutions will continue to spend money on despite the fact that economic growth is slowing. So let's answer the question, which one is the better dividend stock to buy? Pairing these two dividend stocks, starting with their dividend yields. Looking at the dividend yield, Raytheon boasts a 2.4% dividend yield compared to Deere, which posts a 1.33% dividend yield. Now, even if you're primarily a dividend stock investor and you love dividend yield, this is not the only factor you should look at when you're investing in a dividend stock, because your total return composes not just of the dividend yield, but also the change in the stock price. So you have to look at the factors that might change the stock price in addition to the dividend yield, because the change in the stock price could evaporate the yields you earn from dividends. So let's look at the other factors, one of which is revenue growth. Now, looking at revenue growth, you can see here that Deere in its most recent several quarters has exploded in terms of revenue growth compared to Raytheon, which is growing as well, but at 9.53% in the most recent quarter compared to 30% for Deere. Both these dividend stocks have excellent revenue prospects in the near term. Both of them are experiencing factors that are helping boost revenue. For Deere, it's rising commodity prices that's increasing demand from farmers and construction industry to boost output. For Raytheon, it's the tensions, the Russian invasion of Ukraine, that's causing increases in military spending, which is good news for Raytheon technology. So both positive prospects for these two dividend stocks over the next several quarters, perhaps several years. Next, I wanted to compare their operating profit margin over the trailing 12-month period. In this metric, you can see Deere taking the lead here. From 2019, you could see they were very close, and then Deere has exploded higher while Raytheon has moved lower. Deere with an operating profit margin of 22.3%, with Raytheon in an operating profit margin of 8.6%. So Deere clearly with the advantage here. And recently they increased prices on their products and equipment by double digits. So I expect this operating profit margin to incrementally move higher over the next few quarters. Finally, I wanted to compare these two dividend stocks on valuation, and judging by the forward price to earnings ratio, Deere stock is considerably cheaper than Raytheon. Deere is trading at a forward PE of 11, while Raytheon is trading at a forward PE of 16.33. So, given that Deere has the better operating profit margin, better revenue growth, and lower valuation, I'm going to pick Deere as the better dividend stock to buy between these two. Now, remember what I mentioned earlier, you're getting a dividend yield and the change in the stock price. So, yes, Raytheon did have the better dividend yield, but given the other prospects and the prospects for Deere's stock price to increase more so than Raytheon, that's what swayed my opinion closer to Deere. Okay, so that's all I've got for this video. Thank you so much for watching. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.